This pattern might be brand new to you. You might have never heard of it before, but it's called the corrective double top. Okay, so the difference within the traditional double top is that the corrective one appears in trending markets. And again, so we're going to differentiate right now corrective double tops from equal lower highs. So make sure to actually focus on those things, because they appear very often in the market, and sometimes you might get confused, but with the help of this pattern you can still remain confident, you can still remain like balanced, and you can still strike with the overall trend, although you start seeing something different. Okay, so this is signified by a failure to make a new lower low and then pulling back to the previous structure lower high, grabbing more orders and then flushing for a new lower low. In this situation, as long as the major lower high holds, which is, remember, our strong high that has caused a break of structure, as long as it holds, we keep shorting. We just know that the market sometimes does not have enough orders to continue and take out the weak low, so it's going to pull back a little bit and it's going to create a corrective double top. Okay, so again, be aware of the strong high and trade against it. It will hold, it should hold until we are wrong. Okay, so if we actually illustrate this pattern with some textbook examples right there, we're having a downtrend. Again, remember, corrective double tops are formed in downtrends, not in trending markets. We should say downtrend right there as well. Push, pullback, this structure causes a break of the last lower high. So this is our strong high, this is our lower high. There is our range, the market pulls back above 50%. We start looking for shorts, and maybe we catch a short right here. Maybe we catch a short. The market pushes down, but spot that it fails to make a new lower low. So it fails to break this structure. Okay. And then what's going to happen in these occasions is that it simply means, if you just logically think of it, there were not enough orders for the market to push lower and to create a new lower low. So what happens? It's going to pull back. Okay. And usually in a corrective double top, it's going to pull back to your entry, which is where you entered. And what it's going to create is going to create a double top within the trend. Okay, most of the times it's gonna also manipulate this one, which is where we actually jump onto the real market example. So we're having a downtrend, there is our break, there is the confirmed low, there is the strong high. The market pulls back, taps into a zone, it gives us a short, it pushes down a little bit, but it stops right there, it starts to range. Right, usually in the market you're gonna see the market give you a nice reaction from your entry, maybe you take your short right there, and then it just starts to range and maybe slowly coming back at you, and then you get scared. You're like, oh, okay, I'm gonna go break even, I think this one is going up right now. As long as the major higher low is there, we are bearish. As long as the strong high is not broken, we are bearish. So don't lose hope. Okay, maybe you get stop loss and stopped out, okay? Because sometimes, as I told you, it's not a textbook double top. It's gonna liquidate, it's gonna break the high. Why? Well, because we as traders, we're retail traders, so what do? If you take a short right there, there is a very high chance that your stop loss is just above the structure. So what the banks are gonna do is they're gonna take your stop loss, they're gonna just throw a little wick above right there, and then guess what happens? It flushes. Okay, but of course, if you see the liquidity gap, if you drop to a lower time frame, you're still going to take the short, which is of course what we're going to learn in the next module. But I want you to be aware of this formation because it appears a lot in trending markets. Again, the market is pushing, creating a lower low, lower high, creating a new lower low right there. So then this is our strong high. The market initiates a pullback, gives us a short right there, tries to push, but fails to make a new low. And then it starts to pull back. And again, at this time, all of this is minor structure. It's internal. Our major range is from this high to this low. So whatever happens right here, we don't care until it really actually breaks this high. So what is going to happen? It's two things. The market can just retest this zone and flush, or it can fake this zone by a little bit and it's still going to flush. Okay. This is just the probability of the things, and we don't know if it's actually going to manipulate or not. Okay. What we are going to do is we're going to wait for the market to approach this zone. We're going to drop again to our 1 minute time frame, and we're going to wait for our entry pattern, which, guess what? Our entry pattern is still market structure. As the market is pushing higher on the 15 minute, it's in an uptrend. So as it taps into this zone, we're going to wait for that 1 minute uptrend to change to a downtrend. And then we simply take it to the downside. As simple as that. Okay. So hopefully this one is making sense. The detail is that on the push down, it fails to make a new lower low. It fails right there. Okay. It stops in the middle of the move. because we have the next formation, which actually does make a lower low, and then it pulls back again. Okay, but we're going to differentiate between this a little bit later. There is a little example also implementing some different stuff that we learned. We have two ranges right there. What did I tell you about ranges? I'm not going to repeat. I hope you know. If you do not, then go back to the trend identification masterclass. Okay, what do we have right there, guys? We have a triple top. Okay, triple top. It was bottom, it became even triple. A lot of people are short right now. Even the structure is broken. So in this case, we are also going short, yes. But what are we aware? That above and below consolidations, there are orders. Guess how many people went short? Just after this bearish engulfing candle, their entry is at the bottom and their stop loss is right there. There are people short even from the top. Their stop loss is right there. There are people waiting for this level to be broken so they can enter long right there. So I'm starting to build a story to see what actually happens. Okay, then we actually push into the lows, we pull back, we create a lower high. Cool. It actually takes out the weak low. Very cool. Then where is our strong high? It's right there. So what is this? Right there. It's pretty much a corrective double top. The market pushes, it pulls back right there. It tries to push lower with this candle. It pulls back, it tries again, but then it fails. It fails on both occasions, right? And then we pretty much start pumping into the highs. Okay, but this right here is also a corrective double top because we pushed, the market pulled back, it tried to create right there a lower high. It pushed, it failed to break the lower low. It came back to retest the top again. Then it tried to push down again, but it failed. And then we exploded. And guess what happens right there? Everybody's stop loss, right? Everybody's right now entering longs. Stop losses are down there and everybody gets stopped again. And who is in the trade? No one. But everybody stopped and the institutions, the BFIs are of course winning. But then we as structure traders, we know, okay, cool. So this one is liquidated. Right now this turns into a strong high. Why? Because it broke this one. Okay, this one is strong. This one is potentially weak. There is our pullback initiating. The market creates a pullback and stops right here and see what it does. It tries to push down. Maybe we caught a short right there. It tries to push down and then it starts to range. Did it make a new lower low? Nope. It starts to range and it failed to make a new lower low. So there is the time where you have to adapt and you have to start thinking, okay, what could happen? Well, two things can happen. The market can either just come to retest your entry or to retest this zone, or it can come in a little bit higher. Maybe it can come in like at this region, okay? And you are gonna be prepared for both. What happens? Let's pay attention. Where is the high? It's right here. What happens is the market just took it with a little wick. It took it out right there. Massive bullish engulfing candle, scaring people, stopping out the sellers. Maybe we also got stopped out, but knowing our entries, this would be a beautiful TP for us right there. Potentially also at demand level, which is another confidence for the market to actually push higher. Okay, then we take the orders, we liquidity grab, and guess what? There is not a body close. This one did not close with a body. This one did not close with a body. You immediately see, corrective double top. Drop to a lower time frame and take your short, and there is your weak low taken. Okay, so hopefully this one makes sense with this example. Study it and see how actually all of those concepts are right here, and also if you clearly understand the ranges. This was a range, this was also a range, so this was just building up for taking out in all directions. So make sure to also go to trend identification masterclass where I also broke down in detail ranges. This is corrective double top. Let's cover corrective double bottom right now.